The House GOP has passed a significant multi-trillion-dollar tax and spending package, aligning with many of former President Donald Trump's priorities, including the permanence of his 2017 tax cuts and new tax breaks for tip income, overtime pay, and older Americans. The bill, dubbed the One Big Beautiful Bill Act, also proposes historic spending cuts to programs like Medicaid and SNAP, affecting low-income families. As the bill moves to the Senate, policy experts anticipate substantial debate, particularly over the Medicaid provisions and the state and local tax SALT deduction limit. The House version proposes increasing the SALT cap to $40,000, though this figure may be reduced during Senate negotiations. The Senate is expected to use the budget reconciliation process, which requires only a simple majority, to pass the bill, bypassing the filibuster. However, concerns over the potential $2 to $3 trillion increase in the deficit over the next decade could stall proceedings. The Byrd Rule, which restricts non-revenue-related provisions, will also play a critical role in shaping the final bill. Changes in the child tax credit are another focal point, with some senators advocating for a more generous credit than the House's proposed $2,500 maximum. As the bill progresses, its implications for fiscal policy and economic inequality will be closely scrutinized, with significant impacts on market sentiment and consumer finances expected depending on the final provisions.
Vice President JD Vance's keynote at the Bitcoin 2025 conference in Las Vegas has brought significant optimism to Bitcoin investors. The speech underscored the Trump administration's strong pro-Bitcoin stance, highlighting recent regulatory reforms aimed at fostering a more crypto-friendly environment. Notably, a major reshuffle at the Securities and Exchange Commission, SEC, and the establishment of the Strategic Bitcoin Reserve are pivotal steps in this direction. These measures are designed to spur innovation and economic growth, potentially benefiting millions of Americans who hold Bitcoin. Vance announced upcoming legislation for dollar-pegged stablecoins and a comprehensive regulatory framework, which could pave the way for mainstream crypto adoption and greater institutional involvement. The administration's view of Bitcoin as a long-term strategic asset was emphasized, with the Strategic Bitcoin Reserve being a focal point. This initiative aims to enshrine Bitcoin's strategic importance in law, ensuring continuity across future administrations. Vance positioned Bitcoin as a tool for maintaining competitive advantage against geopolitical rivals like China, highlighting its alignment with American values such as innovation and freedom. However, potential conflicts of interest have surfaced, given Vance's personal Bitcoin holdings and the Trump family's involvement in Bitcoin ventures. These developments have sparked calls for stricter regulations to prevent policymakers from leveraging their positions for personal gain. Overall, the administration's support reduces regulatory uncertainty, making Bitcoin an attractive long-term investment option, although investors are advised to remain vigilant about ethical concerns.
Philip Morris International, PM, has emerged as a standout performer in the choppy 2025 stock market, delivering a remarkable 50% total return year-to-date, significantly outperforming the flat S&P 500. This surge is attributed to the company's strategic pivot from traditional cigarettes to alternative nicotine products, such as its leading brands IQOS and ZYN, which now account for 42% of its revenue and 44% of its gross profit. The shift to smoke-free products has not only improved Philip Morris's unit economics, but also propelled its overall revenue to $38 billion over the last 12 months. Additionally, the depreciation of the U.S. dollar has further boosted the company's revenue in dollar terms, as Philip Morris primarily operates outside the United States. Despite the impressive returns, investors are pondering the sustainability of this growth. Philip Morris's forward price-to-earnings (PE) ratio has increased from 14 to 24, and its dividend yield has decreased from 6% to 3%, indicating a more expensive valuation. While these metrics suggest that the recent explosive returns may not be sustainable, the company still offers a solid dividend yield and potential for long-term growth. With continued expansion in alternative nicotine products and pricing power in the traditional tobacco segment, Philip Morris is well positioned for steady revenue and earnings growth, promising solid long-term returns for shareholders, albeit at a more moderate pace.
The cryptocurrency XRP has experienced a significant surge, rising from 50 cents to $2.20, marking a 345% return over 6 months, largely attributed to recent pro-crypto policies under the Trump administration. A pivotal change came with the replacement of SEC head Gary Gensler, known for his stringent crypto regulation, with Paul Atkins, a proponent of the crypto industry. This change led to the SEC dropping its long-standing lawsuit against Ripple, the company behind XRP, which had accused XRP of being a security. The resolution of this legal battle is anticipated to bolster Ripple's business expansion and facilitate greater institutional adoption of its blockchain-based payment network, which is crucial for cross-border transactions. Additionally, the establishment of the U.S. digital asset stockpile, which will include XRP among other cryptocurrencies, signals a potential catalyst for XRP's growth, especially if the government decides to purchase more XRP. Furthermore, new stablecoin legislation is anticipated to indirectly impact XRP through Ripple's introduction of a new stablecoin, Ripple USD, designed to increase activity on the XRP blockchain. While this could drive demand and create new use cases for XRP, there is also concern that it might cannibalize existing XRP transaction activity. Despite the initial euphoria being priced into XRP, these developments suggest further upside potential, with expectations of XRP possibly reaching its historic high, though it has never surpassed the $4 mark.
The Socioeconomic Rights and Accountability Project, SERAP, has initiated legal proceedings against the Nigerian National Petroleum Company, Limited, NNPCL, over an alleged N$500 billion shortfall in oil revenue remittance to Nigeria's Federation account for the period between October and December 2024. SERAP's lawsuit, filed at the Federal High Court in Lagos, seeks to compel the NNPCL to account for the missing funds, which were reportedly not transferred to the National Treasury, and to involve anti-corruption agencies in investigating the matter. This legal action underscores ongoing concerns about transparency and accountability within Nigeria's oil sector, which plays a crucial role in the nation's economy. The backdrop of this lawsuit is a broader financial context where the NNPCL reported generating N$1.1 trillion from crude oil sales in 2024, but only remitted N$600 billion, leaving a significant N$500 billion unaccounted for. This discrepancy has drawn attention from international bodies like the International Monetary Fund, IMF, which has urged the Nigerian government to ensure that savings from subsidy removals are accurately reflected in the national budget. The issue is further compounded by the recent removal of petrol subsidies under President Bola Tinubu's administration, a move that, despite its immediate impact on fuel prices, was intended to bolster government finances by reducing expenditure. The outcome of SERAP's lawsuit and the NNPCL's response could have significant implications for Nigeria's fiscal policy and its efforts to enhance transparency in public finance management.
Gift Nifty, a prominent derivative contract on the NSE International Exchange, NSEX at Gift City, has set a new monthly turnover record of $102.35 billion in May 2025. This surpasses the previous peak of $100.93 billion recorded in April 2025, marking a significant milestone for the platform, which began full-scale operations in July 2023. Since its inception, Gift Nifty has accumulated a total turnover of $1.93 trillion, with over 43.28 million contracts traded. Despite this success, Indian retail investors remain unable to access Gift Nifty through the Liberalized Remittance Scheme, LRS, as the Reserve Bank of India, RBI, restricts the use of the annual $250,000 limit for leveraged trading. However, Indian brokerages can onboard non-resident clients and wealthy family offices, allowing them to participate in this thriving market. NSEX, established in June 2017, is a multi-asset international exchange located in Gift City and operates under the International Financial Services Centers Authority, IFSCA. It commands over 99% market share within Gift IFSC, offering a diverse range of financial instruments, including Indian single stock and index derivatives, currency derivatives, and global equities. The platform also supports the listing of various financial instruments like SPACs, REITs, INVITs, and ESG-linked debt instruments, all under IFSCA regulations. Notably, both NSEX and Gift Nifty have secured key regulatory approvals, including including a Part 30 exemption from the Commodity Futures Trading Commission, CFTC, and class relief from the Securities and Exchange Commission, SEC, facilitating U.S.-based investor participation. This achievement underscores the growing significance of Gift City as a global financial hub and highlights the increasing international interest in Indian financial markets.
Gold's performance in 2025 has been robust, with a year-to-date increase of 25.1%, significantly outpacing the S&P 500's marginal 0.5% gain. However, the metal experienced its most substantial monthly decline since December, with gold futures falling by 0.5% to $3,288.90 per troy ounce in May, breaking a 4-month winning streak. This decline coincided with a broader stock market rally, as investor sentiment shifted due to easing tensions in the U.S.-China trade war. The metal had reached a record high of $3,411.40 per troy ounce earlier in May, driven by concerns over trade disputes, before pulling back as negotiations appeared to progress. Market analysts, including Fundstrat's Mark Newton, suggest that gold's recent consolidation phase may be nearing its end, potentially paving the way for new record highs. The ongoing U.S.-China trade talks continue to be a pivotal factor in gold's trajectory, with recent comments from U.S. and Chinese officials indicating stalled negotiations and unresolved issues, such as export controls and rare earth magnet exports. Despite these geopolitical uncertainties, the market has shown resilience, with equities remaining stable and gold experiencing a slight 0.9% decline on recent developments. The outlook for gold and equities remains intertwined with the progress of international trade discussions and broader economic indicators.
Compass Diversified Holdings, NYSE Cody, is facing a securities class action lawsuit initiated by the Rosen Law Firm, which is urging investors who purchased securities between May 1, 2024 and May 7, 2025 to consider joining the suit before the lead plaintiff deadline on July 8, 2025. The lawsuit alleges that Compass and its subsidiary, Lugano Holdings, Inc., engaged in misleading financial practices, including unrecorded financing arrangements and irregularities in sales, cost of sales, inventory, and accounts receivable. These actions allegedly rendered Compass's financial statements unreliable, prompting a restatement and causing investor losses when the true details emerged. The significance of this legal action is considerable for investors and market participants. If the allegations are proven, Compass may face substantial financial penalties and reputational damage, potentially affecting its stock price and investor confidence. The case underscores the importance of robust internal controls and transparent financial reporting, highlighting the risks companies face when these are compromised. Investors in Compass are advised to monitor the developments closely and consider their legal options to protect their investments.
Amazon's stock has seen a remarkable recovery in 2024, more than doubling from a multi-year low of $84 to $200, driven by improved financial performance. The company reported an 11% increase in revenue to $638 billion, with notable growth across all major segments: North America, International, and Amazon Web Services, Oz. A key highlight was the 86% surge in operating profit, showcasing Amazon's effective cost management and operational leverage. The company's strategic initiatives, such as launching Amazon Hall and advancements in AWS, including the Trainium 2 AI chip and Amazon Bedrock, underscore its commitment to innovation and maintaining market leadership. Looking ahead, Amazon's growth prospects appear robust, particularly in high-margin segments like AWS and advertising. Oz is poised to capitalize on the burgeoning AI market, projected to grow significantly over the next decade, while the advertising business is gaining momentum with a substantial 18% revenue increase in early 2025. Although the e-commerce segment faces challenges from tariffs and competitors like Temu and Shein, Amazon's scale and market presence provide a competitive edge. The company's day-one culture, emphasizing customer focus and adaptability, is expected to sustain its growth trajectory, while the stock's current price-to-sales ratio of 3.3 suggests it's neither a bargain nor overpriced. Investors are advised to hold their positions or consider gradual investments for long-term gains.
In a climate of market volatility and economic uncertainty, two stocks stand out as strong long-term investment opportunities: Berkshire Hathaway, and Vertex Pharmaceuticals. Warren Buffett's announcement of his impending departure as CEO of Berkshire Hathaway by year-end has sparked discussions on Wall Street. Despite concerns regarding this leadership transition and the current macroeconomic environment, the conglomerate's diversified portfolio and substantial cash reserves position it well to weather economic challenges. Greg Abel, Buffett's successor, is expected to uphold the company's tradition of strong performance, benefiting from a seasoned executive team. Berkshire Hathaway's resilience and diversified business model suggest it will continue to deliver robust returns. Vertex Pharmaceuticals recently faced a decline in share price following a lackluster fiscal second quarter report, influenced by a non-cash impairment charge and unauthorized sales of its patented drugs in Russia. However, the company's leadership in cystic fibrosis treatments, with exclusive medicines addressing the disease's underlying causes, grants it significant pricing power. Vertex's consistent revenue and earnings growth over the past decade highlight its strong market position. Furthermore, its expansion into new therapeutic areas and territories, alongside a promising pipeline, underscores its potential for future growth. Despite recent setbacks, Vertex's innovative edge and established market presence make it a compelling long-term investment.